I think clearly there's been a slowdown in terms of economic recovery momentum versus what we had seen at the end of last year and at the beginning of this year. And we do see that the government is getting increasingly concerned about this, and a lot of the speeches as well as the indications regarding what could be coming in terms of policy reaction. Now, I don't think that a further significant cut in terms of interest rates or RR alone is really going to be enough to really jumpstart the economy. I think instead they have to be much more targeted and focused and probably implement a whole suite of policies that in conjunction can really boost overall confidence and work together to jumpstart. So, for example, some administrative measures in China with regards to the property sector in terms of jumpstarting demand or getting rid of purchase restrictions. On the consumption front, there's been a lot of talk about tax subsidies or maybe even some kind of consumption vouchers in selective areas. There's a lot of talk regarding supporting private enterprise and platform companies and innovation, et cetera. These are the types of things, more than interest rates, that I think are going to be more effective in China.
But isn't that exactly what they're doing and exactly what they say they are going to do, rather than a lot of talk and pressure saying, well, why aren't they boosting the property market, or why aren't they getting more into spending in infrastructure, the old style boosting measures? Isn't that exactly what they're doing, is what you said, is they're being much more focused and much more targeted on how they approach this thing?
I think they want to, the way that things usually work in China is they actually give you the framework in advance and they talk about the broader direction, and then the policies actually follow in, a sequence thereafter. So generally speaking, I think we're getting a decent idea regarding the direction that they want to go to. We're getting a decent idea that they feel is increasingly urgent and they're actually quite concerned about it. Sometimes when you actually see the weaker macroeconomic data, that's actually to reinforce that they're justifying that in the future that they are going to be using some more stimulative measures versus before. So I think, a lot of things are lining up, but we will continue to see, a series of policy actual announcements in the coming weeks or months, and that'll gradually be implemented. So obviously from the announcement to the actual implementation and to the effect, that will take some period of time as well. So the markets are still a little bit skeptical about that and waiting to see the effect. Is kind of like a show me type of effect. But I think going into the second half of this year, given how low the expectation is now and how the base is very low as well, so sequentially it's quite likely that we'll see a decent pickup, particularly given that the global economy, especially the U.S., looks more resilient versus previously feared. So hopefully in terms of export demand and things like that, we won't have as much of a headwind either.